As an investor, you probably know that right now we've got a problem. But if you want to overcome that problem and still accomplish your mission, stick around because I've got some advice. On April 11th, 1970, Apollo 13 launched from Cape Kennedy on what was intended to be NASA's third mission to land humans on the moon.
Booster. Go. Retro. Go. Vital.
We go fly.
Guidance.
The spacecraft carried astronauts Jim Lovell, Fred Hayes, and Jack Swigert, and spirits were high as Mission Control prepared for another successful lunar landing.
Launch Control, this is Houston. We are go for launch.
However, just 2 days after liftoff, the mission dramatically turned when an oxygen tank in the service module exploded. The explosion crippled the spacecraft, leaving it with limited power, water, and oxygen supplies, and rendering the planned moon landing impossible.
Houston, we have a problem.
Astronaut Jack Swigert's calm declaration to ground control, "Houston, we've had a problem," became one of the most famous phrases in space exploration history. What followed was a crisis management effort of monumental proportions. Mission Control in Houston worked tirelessly to improvise life-saving solutions to problems like rising carbon dioxide levels and dwindling energy reserves, all while guiding the crippled spacecraft safely back to Earth. Against all odds, the astronauts splashed down safely in the Pacific Ocean on April 17th, 1970. Though Apollo 13 failed in its initial goal to land on the moon, the mission became a triumph of human ingenuity, resourcefulness, and teamwork, forever remembered as a successful failure. Here then are my 3 lessons from modern investors from a successful failure in space. Number 1, flexibility in times of crisis. Boy, do we need some of that right now. This episode of the History Lessons podcast is sponsored by Victory Independent Planning. Hey, are you ready to take the stress out of your retirement? At Victory Independent Planning, we put you on the right trajectory with our exclusive VIP retirement glide path. Our smart approach prepares you for what's next by optimizing your sources of savings and income, your medical and healthcare planning, your advanced estate and giving strategies, risk management and investing, and tax planning. Let us help you glide into retirement with confidence. Text GlidePath to 239-567-5477. That's GlidePath, all one word, small letter G, to 239-567-5477 and receive a link to schedule a complimentary consultation. Do it today to start your journey on the VIP retirement glide path, because your future deserves a safe landing. When the oxygen tank exploded on board, NASA's focus immediately shifted from completing a moon landing to ensuring the astronauts' survival. That quick pivot highlights the importance of staying flexible when your original plan falls apart. Similarly, investors must be willing to pivot when financial markets or economic conditions change drastically. Whether it's a sudden recession, new regulations, or tariffs, or an unexpected geopolitical event, clinging to rigid strategies can increase your vulnerability. I'm not saying ditch your plan if it already had market conditions built into it, but I am saying that behavioral finance reminds us of anchoring bias, where individuals fixate on prior goals or conditions rather than adjusting to the reality of the moment. So think ahead, embrace new options, and stay open to change. All that can help turn a tough situation into a potential opportunity.
Can say again, please.
Number 2, resourcefulness is an essential skill. Those engineers working to save Apollo 13 had to think creatively and maximize the limited resources available on the spacecraft. Their success demonstrates the importance of being resourceful under pressure, and that's a mindset that's equally relevant to investing. Resourceful investors look for opportunities, even in a challenging environment, like reallocating funds into more stable income generating assets during market turbulence, or taking advantage of tax benefits, or adjusting retirement plans based on evolving conditions. Again, if you've already got a good plan in place that takes market downturns into consideration, you may not have to do anything right now. But by at least rethinking your existing tools and leveraging your available resources, you as an investor can pivot to new realities and build strategies that endure over time. Lastly, risk mitigation is just as important as growth. If we haven't learned that in the last couple of weeks, we may never learn it. Throughout Apollo 13's harrowing ordeal, the focus was on managing scarce resources, oxygen, water, and energy, to avoid setbacks that could jeopardize the astronauts' return. For investors, this is a reminder, again, as if we need one right now, that protecting portfolio stability is just as vital as pursuing returns. Risk management tools like diversification, emergency cash reserves, and defensive asset allocation ensure that portfolios can withstand sudden market shocks. I hope yours are right now. Apollo 13's story teaches us that long-term success isn't about ignoring risk. It's about anticipating challenges and being prepared for them. While the mission didn't fulfill its initial goal, Apollo 13's improvised success became a lasting testament to human ingenuity. So adjust your strategy to shifting conditions, maximize the tools and resources at your disposal, and apply a disciplined focus on protecting against unforeseen risks. No problem there, right?
I'd say that was a pretty successful broadcast.